What can we do with our money to make more money? The answer is simple, straightforward. We invest it. Over the past 50 plus years, the single greatest increase in stock market value has come from dividend and dividend reinvestment. Stick around to the end and I'll tell you about that little magic thing called DRIP. So tap the like button and let's get started. I'm James Callahan, and this is the Do-Over Show, where we turn our money into even more money. Yes, passive income is one of the most important answers to money troubles. Instead of saving our way to having more, devoting ourselves to practicing radical financial minimalism, or punching a clock and hoping we'll get rich, we turn money into more money by investing it, earning dividends, and reinvesting those dividends. Now, it's easy to take the clickbait of YouTubers, especially the financial YouTubers we all admire, who make so much money from our watching them that they now make too much money to benefit from ordinary things like dividend investing and reinvesting. But that's not me, that's probably not you. So let's get real. Back in January of this year, I shared with you the start of one of my projects, and that is to open up an investing, not a trading, an investing account. I opened up a Roth IRA where I deposit monthly 1/12 of my annual max contribution and invest then in high-yield, low-volatility companies. You can check out that video here on how to get started. Well, today is the end of the first quarter of 2021, and it's almost 1 year since I opened the account, so I want to give you a quick update and check in on the account. Today, the balance at the end of quarter one is $11,072.49 at an average yield of 4.4%, or about $485.01 a year in dividend income. And each month, on the first of the month, I invest 1/12 of my annual max contribution. That's about $583. And I invested in one or more of the 11 companies that I already owned. So I grew my positions in each. That is, I'm not trading because I'm not selling. I chose these companies because I know what they do. And you've probably heard of them too. And that's important to me because it keeps me from feeding my Fomo. Fomo is that monstrous superpower that makes us chase after the latest, shiniest new thing, meme stonk, or obscure penny stock being pumped on Twitter today, that will go from 4 cents to 40 cents for a 1,000% return. But the only thing that's guaranteed is that my money will go away and I will never see it again. And what kind of relationship is that? Instead, I want my money to stick around. I want my money to go to work for me. I want my money to make more money for me and attract more money because that's what money can do. And here's how it does that. I still own all the same companies I did back in January, except one. People's United Bank was bought out, so I took the profit and bought Associated Bank in its place. ASB pays a modest dividend of 3.3%, and it fit that sector. Small cap value in the financial sector that I was looking for. My realized profit from buying, holding, and then selling People's Bank after it capped out was $289.56 profit, or 61.23% in just about 6 months. And I put all of that into Associated Bank, buying 35 shares at just over $21 a share. So today I'm holding Apple, Associated Bank, B&G Foods, Duke Energy, Iron Mountain, Altria, Realty Income, Pfizer, Simon Property Group, Invesco S&P 500 High Dividend Low Volatility ETF, and Walgreens. So here's my return since January. I have an unrealized gain in the account of $1,893.44, or 20.52%. And that was during the sector rotation from growth to value. And most of my high-yield, low-volatility stocks were stable to strong in this market. Now, I don't look at the account every day. I discipline myself to avoid doing that. I check in on it maybe once, twice, or 3 times. You know those days when the market is up big and you just want to run and race to your account and see how much you made? Or those days when the market tanks hard, big downturn, and you think, oh, how much money did I lose today? Well, here's the thing about long-term investing. Don't look. Don't look at it. Set a date, a couple dates, and say, I'm not going to look at it more than a few times a month. And then you would do it to plan, well, when my next contribution comes, what am I going to do with it? What am I interested in putting in? Has that dividend cleared? Has it been reinvested? Those are the questions that are important in an investment account. Remember, this is not a trading account. And the first quarter of 2021 had some ups and downs. The shift from growth to value stocks meant that a lot in the tech sector, they took a hit. But that meant that other stocks, the value stocks, the dividend-paying stocks, tended to be stable to strong performers during this period of time. The stars of my portfolio include Iron Mountain with a 53.82% return, Walgreens at 40%, 40.62%, and the superstar of Simon Property Group, which has returned 74.99% of my initial investment. I'm going to round that up to an even 75% and call that winning. You know what that tells me? That tells me these are where I wish I had more money invested. It tells me what my winners are. But here's the real news of this update: DRIP and fractional shares. Part of the eighth wonder of the world, that compound interest voodoo that turns our money into more money. And it's part of automated investing that really puts the passive in passive income. In just about any good investing platform, you have the option of automatically reinvesting dividends in the stocks that pay you dividends. And the funny acronym for that is DRIP, Dividend Reinvestment Program. And it combines with another feature of investing, fractional shares. What are fractional shares? That's a great question. When I received a $7.55 dividend from owning a few shares of Walgreens, it was reinvested in Walgreens and became 0.144% of a single share of Walgreens, trading at $52.35 at the time. Now, if you're not impressed with 0.144 of a share of Walgreens, well, let me give you a different way of looking at it. This account is almost 1 year old, and of the $11,072 balance today, $278.47 of that are reinvested dividends. So of the $2,320 in the total profit to date, unrealized gain, about 12% of that are from dividends reinvested. And in 1 year, that means that the $8,752 that I have invested in the account is worth now $11,072. And that is a total of a 27% return. And I'll take 27% anytime someone offers me 27%. I hope this quick look into a dividend investing account has been helpful to you. If you've learned something, if you've enjoyed it, or even if you just like to look under the sheets of somebody else's investment accounts, then please tap the like button and remember to subscribe and ring the notifications bell so you don't miss the next episode of The Do-Over Show every Monday and Friday. I'm so glad you found me and I found you. Thanks.